Even though no one really knows what the future holds for the Cincinnati real estate market, as we close out 2023, I wanted to make some predictions for 2024 in the Cincinnati real estate market. So whether you're buying or selling or doing both, you have an idea of what factors to anticipate, how they affect each other, and overall what kind of a strategy you can employ to have success buying or selling real estate in Cincinnati in 2024. Also, for a little bit of fun, in about 6 months, we'll take a look back on these predictions and see how accurate or inaccurate they were. So let's jump into the first prediction for real estate in Cincinnati in 2024. Interest rates have been by far the hottest topic in real estate all across the country and also here in Cincinnati in 2023 as they reached peak rates of nearly 8%. Now they're closer to around 7% or a little bit less depending on who you ask for the average mortgage interest rate on a 30-year fixed rate mortgage loan. I predict that next year they will be lower in 2024 than they have been in 2023. I believe somewhere in the 6% range, maybe 6.25 to 6.75, somewhere in that range. No one really knows, but a lot of economists are predicting they may go as low as 6% even, or maybe even creep into the high fives. I don't think it's going to go that low, primarily because that's based on the Federal Reserve cutting interest rates 3 or 4 times next year. They most recently, here about a week ago, paused rates, which they've done a couple times in a row. I expect that they may cut rates in 2024, but because of the recent CPI report, the Consumer Price Index, which is what the numbers that the Federal Reserve uses to make these decisions, they have inflation at 3.1% right now. Their target that they've stated from the beginning with raising interest rates is to get that level of inflation, that number, down to 2%. Now, both you and I know that as we go to the grocery store and we put gas in our cars and we buy anything for Christmas this year and throughout the entire year, we've seen pretty much the cost of everything go up by a lot more than 3%. So we know those numbers are a little bit doctored to begin with, but they're using those numbers. They're at 3.1% right now. They need to get to 2%. That's their stated goal from the very beginning on why they've been raising rates to tamp down inflation. So I expect that the Federal Reserve may pause rates again the next time around. It kind of depends on where that number from the CPI report comes in. Again, they want to get to 2%. We're at 3.1% right now. So although I do agree with the economists that are predicting lower interest rates in 2024, I don't think they'll get as low as 6% or the high 5% range. In response to lower mortgage interest rates, I do expect buyer demand to increase. More buyers will be shopping for homes because it's less expensive to do so, at least in terms of interest rates. So we expect some of the homeowners who also own a home, have a mortgage at 3 to 4%, don't want to trade up to a 7 to 8% mortgage on their new home. Certainly it didn't make sense for them in that situation to make their move, whether they're upsizing or downsizing or even relocating. A lot of homeowners have put their plans to buy a new home on hold because of the higher mortgage interest rates. As those interest rates come down, I expect more of those buyers to get into the market to move forward with their plans. Even though they're not going to get a 3 to 4% interest rate like they have on their current home, they're going to get close enough to that rate where they feel like it's worth it for them to go ahead and move forward with their moving plans. We also may see some of the renters who have experienced higher and higher rents in 2023 to move into the market. Now they may think that the mortgage payment is going to be a little bit less, or they're paying less interest, whatever magic number they need to see in terms of interest rates that's going to encourage them to enter the market to buy a home finally. Some of them want to be renters, and that's totally fine. It's a lifestyle choice. There's nothing wrong with renting a home if that's what you want to do. But as some people that are currently renting have had a dream of home ownership and have put that off because of 7 to 8% rates, as those rates come down into the sixes, we're going to see a lot more of those renters entering the market too. So we're going to see homeowners and renters entering the market, increasing demand from buyers more so than we saw in 2023. So we will see an increase again. If interest rates decline, we'll see an increase in buyer demand in 2024. The last few years, we've had a severe housing shortage, low inventory that has caused multiple offer situations for buyers. It's made it difficult for buyers to purchase a home, to find a home, to get it under contract. The prices that they're having to pay, the concessions they're having to give to sellers has been astronomical the past few years, and home prices have risen sharply as well because of low inventory. So a lot of the difficulties that buyers have had and the easy time that sellers have had in the past couple of years have been a direct result of high demand and low supply or low inventory. We do expect next year, or at least I do, that inventory might remain basically the same. There's really no evidence to suggest we're going to have some sort of huge influx of new listings to market. As we mentioned there when we were talking about demand, we are going to see homeowners coming to market to purchase a home. So their homes will be sold in most cases. So that will bring some inventory. But when they do sell that house, they're also buying a house. So they're adding a house to the inventory, but they're also taking one away. So in order for inventory to increase, of course, we have to have a net gain in the number of listings on the market. When a homeowner purchases a home and sells a home, that doesn't do anything to increase inventory. If we see more renters who don't own a home right now buying more homes, that may actually cause inventory to decrease. So lower interest rates are going to encourage more buyers to come to market. Again, higher demand, but we don't really have any evidence to suggest that we're going to have an increase in inventory. We don't think there's going to be a bunch of foreclosures or a bunch of investors coming to market to liquidate their assets because they have a lot of equity already from the past few years, especially the longer ago they bought, the more equity they have as long as they've been making their payments. And although the economy hasn't been as strong this year as it has in years past, we don't see a bunch of foreclosures or short sales coming to market anytime soon, at least here in the Cincinnati area. So I see that inventory is probably going to stay flat or even maybe decrease a little bit to be even more of a seller's market in 2024. Home prices in 2023 are up over 6% in the Cincinnati area. There are some markets throughout the country that are actually down. I'm sure if you've been following the real estate news this year, there's been many calls for a real estate crash. We simply, again, due to low inventory and relatively strong demand, with that potentially increasing, the demand increasing with lower interest rates next year, there's really no evidence to suggest that we're going to have any sort of price correction or crash or anything like that. And in Cincinnati, for sure, again, real estate is a very localized market. So what's happening in Phoenix or other parts of the country is certainly different than what's happening here in Cincinnati. Most people move here because of family or because of work. It's not a vacation destination. We're not subject to the huge swings in highs and lows of the real estate market. The Midwest is usually pretty stable in terms of how the market swings back and forth. So here in Cincinnati, I expect that home prices are going to rise by more than 6% in 2024, because again, if we have more buyer demand and we have relatively the same or less supply, prices are going to go up more than they did in 2023 when they went up over 6%. So I wouldn't be surprised if we have even double-digit 10% plus home price growth. Of course, I don't know if that's going to happen, but if interest rates decrease and the extent to which they decrease, the lower they go, the higher home prices are going to go because of more demand and because of supply being eaten up by renters, and then also homeowners who are buying and selling are not adding any inventory. And again, we don't think foreclosures or short sales are going to be flooding into the market, so there's really nowhere for inventory to come from unless builders are able to outpace demand. They're able to catch up and build more and more, which again, we have limited land on which to do that. There are a lot of builders right now that are sitting on some inventory they haven't sold yet, so there's no incentive for them necessarily to continue to build until they've sold some of that out as well. So we may see a little bit of ebb and flow back and forth of that. Hopefully new construction will help us to alleviate some of those problems we have in a low inventory market, but I do believe that buyer demand is going to outpace housing inventory in 2024. And the extent to which it outpaces supply depends on how low interest rates go. The lower the interest rates go, the more demand we're going to have, and it's going to eat up that inventory more quickly. And new construction is going to have to try to keep up with that additional demand the lower interest rates go. So all of that to say, I think home prices are very strong and stable here in the Midwest. In Cincinnati, I think that home prices will go up more than 6%, again, maybe even 10% or more in 2024. If you have any questions about what the real estate market here in Cincinnati holds in 2024, if you're planning to buy or sell or do both, you want some advice on how to navigate the market next year, feel free to reach out to us. We'd be happy to have a conversation with you to assess your needs, to help you map out a game plan for how you can achieve your real estate goals. The best way to do that is to visit our site at 513flatfee.com. Click one of the links there to schedule a call so we can set aside some time to assess those needs and map out that game plan for you so you can achieve your real estate goals. I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty.